everyone. Welcome to the Jeff and Michelle Show. I'm Jeff Jimenez, one of your hosts, and our co-host here is Michelle Jimenez. And we are excited and we are very happy to bring to you one of our preferred lenders. He is known as the Get Up and Go loan officer. Just get the job done. No loan too small, no loan too big. He can do it all. Mr. Eddie Rojas from Embrace Home Loans. How are you, Mr. Rojas?
I'm doing great. Just taking in the new week. You know, it's a little cold out there. Wishing the spring would get here, but you know, we'll deal with it, man. Thank you.
We got teased last week, right? We got teased last week. It was like 60 degrees out, felt beautiful, and then it was like back to 30. It was like
absolutely.
So today we're gonna go over first-time home buyers, right? Crazy days ahead of us, right? The market is insane. We are at an all-time high sellers market, competitive. There's way more buyers in the marketplace now than there are homes to be had, right? So I mean, a couple things that I know that create different markets, right? And everybody gets confused, right? And maybe you can elaborate on this, right? So for market, everybody talks about absorption rate. Most buyers have no idea what an absorption rate is, right? So what that means is it just means the amount of inventory we have on the market in that current time, right? So Eddie, if I was sitting here and I'm a buyer in today's market and I'm looking at houses and I'm thinking, man, when's it going to be a buyer's market? The reality is it doesn't become a buyer's market until the interest rates really rise above really 5%, right?
Correct. Yes. And, you know, right now it's obviously with COVID going on, it created a whole new dynamic in the market with everything. I mean, lending guidelines, you know, sellers wanting to get out, buyers wanting to expand out to suburbs. You know, my biggest thing I've seen, obviously, is the working from home aspect. People don't have to go to the office anymore. So, boom, you know, they're willing now to get out of the city in those small apartments where the rent is crazy. Say, hey, you know, why can't I just get a mortgage now? And, you know, that way I can nice big office, you know, get the daylight in there, go outside in the backyard and still do what I have to do for work. So obviously so many factors come into play in terms of what we're doing. But, you know, as long as you're prepared, you know, with the right team and the right information, you know, it gives us the opportunity to help these buyers out and put them in the best position possible. You know,
right. So you would say, right, I mean, planning is key, right? Yeah. Planning is the key, right? You should not be going out looking at houses unless you've gotten your plan set up, right? And someone like myself and you, we can sit down, we can do a buyer consultation, we call them, right? Where we give it's free. It's a free service. Literally, it's a window into your situation. And then this way, we're able to kind of form a plan that fits you, right? You may be ready to go tomorrow, but sometimes you're not ready to go for a couple of months. Eddie, what would be some of the things that a first-time home buyer should look out for based on the fact that, you know, what would cause them to have to wait those few months? What might be some things that come up that says, hey, you're not ready today, but if we do X, Y, and Z, what are those X, Y, and Z things?
Well, obviously the biggest thing that you want to take into consideration is your credit, right? Because sometimes that could be very sensitive. You know, your income and your assets, that's pretty straightforward. You know, if you're a W-2 employee or a 1099 employee, you know where your income is going to be on a monthly basis. You know what it's going to come in. You know, obviously if you're getting a raise, that's another factor. But those two things in terms of assets and income are pretty as straightforward as they come, right? With the credit, you know, sometimes it could be very sensitive. You know, a $50 collection, a $100 collection could be the difference between you qualifying for a loan and not qualifying for them. It sounds so little, but I've seen it time and time again where, you know, somebody maybe didn't pay a medical bill that was like $50, $60, and it's been in collection for 3 months reporting that way, and it tanks your score. You know, so it could be brutal. You know, it could be very disheartening because, you know, you've obviously put yourself in a certain position with your income, you've saved your money, run your credit, and you think it's fine, and then boom, something that from 6 years ago is still negatively reporting, and it takes the sale, you know, wind out of all the sales. So
we call that the hidden gem, right? The hidden gem. Oh, not yet.
Not exactly. So, you know, I with any aspect of what I do on the lending side is more than anything is education, right? You mentioned it. You may not be ready now, but, you know, we want to put you know, if you're ready to go, you know how we work. We move quickly. You know, we get documents, we run credit, I'll let you know your limit, let you know your monthly payment, your cash to closing, all that stuff. But if we're shifting to maybe the education side and you're not ready, say, hey, this is what we have to do for the credit report, pay them all off. I don't care if you don't agree with them or not, just to get rid of them, because the credit bureaus don't know the real story, and nor do they care. So that $100 one that you think it might not be fair doesn't matter. You want to buy a house, that $100 in the long scheme of things is not even going to make or break you. So
you're gonna let $100 cell phone,
exactly. Mostly our cell phones, T-Mobile,
always Sprint and AT&T. I feel like it's always Sprint and AT&T. I mean, sorry, Sprint and AT&T, but realistically, I swear to you, every single time it's majority Sprint. Let's be real, it's really always Sprint. I mean, because I don't know what it is, but for some reason, people just seem to just not pay their Sprint bill. I don't know. It's weird, right? But it's interesting to me. But one thing you said to me was like, I'm gonna have to pull credit, right? A lot of people get really, really afraid. They're like, but my score is going to go down. But here's the thing, Eddie. Why do you need their credit? Why is that so important?
Well, because it's a major aspect of what we do for several reasons. Obviously, it lets us know where we stand with your current liabilities. Because depending on the amount of debt that you hold on a monthly basis, whether it be car loans, personal loans, student loans, high credit card minimum payment, that's going to have an impact on what you can qualify ultimately. The big kind of buzzword we have is total debt to income ratio, right? So for FHA and for conventionals, they have their guidelines, and it varies, right? I mean, if you have reserves, they'll let you get away with a little more higher threshold. Obviously the credit score is huge in that department as well, because that's going to determine how much threshold you have, right? So if you're holding too much debt, because we base everything off your gross monthly income. So if you're holding too much debt, they're not going to let you borrow over a certain percent. So whether it's paying off, any small personal loans or credit card balance. So the biggest thing that you have is maybe like a car loan, or a student loan that you're not going to just pay off. The credit reporter is good because we're going to look at all three bureaus, right? Most people see their phones in their Credit Karma, which I use. Everybody uses, and everybody's like, and I hear it all the time. We come, he's like, oh, Credit Karma says I'm at 680, this or 700 or 850, and it's like, well, it's not. It's just they're just estimation of your last reporting. What it is, and it's only two bureaus, sometimes only even one, right? So on the lending side, we have to use the middle score of your three scores, right? So you take the highest, lowest, your middle score is your true score, and that's what's going to determine your loan program, your rate. That's everybody's biggest question, and that's why it's so important. And the misconception of it lowering your score, I'm a strong believer if you've taken care of your credit, obviously if there's something on that you have no idea about, but if you're somebody that's always been on top of your credit, pays off all their credit card bills every month, like most people do, car loans on time, any student loans on time, all that stuff. If your credit's good, it's going to remain the same after the credit pull, and the big thing also too is when you're talking about a mortgage, outside of I would say student loans, because it's crazy, but it's going to be the biggest debt you're going to incur in your life, without a question, right? It's not like taking out a car that you could pay off in 7 years. It's not like taking off, applying for credit cards. It's $1,000 balances. Our bank needs to make sure that we have everything into consideration of your whole credit history, right? Yeah. Because if we don't have all three bureaus, we can't make it, us as loan officers can't make a true assessment of what it actually is going to be.
Which really, and that's what I tell all of our first-time home buyers, right? I'll say, look, guys, I know you're scared to have your credit ran, right? But at the end of the day, that's going to tell us what we can do. It's going to tell me if you can buy a house today, if we have to do X, Y, and Z to get you a better interest rate, to get you to qualify for that house that you really, really want. And it also is going to help us find out how competitive we can be with you, right? Because right now, it's not necessarily always about the best offer, right? Like everybody's got this conception in their head that like highest and best. Well, if a real, if fast forward real quick, I'm going to switch shoes real quick. But if we thought about it this way, just for a quick second, right? And if you were a seller, what's more important to you? the highest offer amount, or the person that has the ability to actually come up with a difference over that amount, right? So if I list a house at 300 and I put it off for 350, sorry, the house phone's ringing. You know, what can you do? Right?
Never stop working.
You know, if I put this up for if I put an offer in on a buyer for 350, I'm calling Eddie. Eddie, I got a buyer. House is 300. They're up to 350. Buyer loves the house, wants the house. Payment's not that much different. Down payment's not that much different. Right? But what is, right? The first question is, Jeff, is it going to appraise, right? That's the first question. Jeff, is it going to appraise? Look, Eddie, it's close. I got a couple, right? And you're going to say, Jeff, the buyer does or doesn't have the ability to come up with the difference, because you're going to know, right? You're going to know their financial situation. So that's why your real estate agent, your loan officer, your attorney all need to be in sync with each other, because if they're not, somebody's going to drop the ball and it's going to end up hurting you, right? So hiring the right team, not necessarily the Jimenez team, although, sorry, I always mess that up. The Jimenez team, right? Not hiring the Jimenez team, right? But with hiring us as your agent, we're also going to help you get in touch with people like Eddie, with our preferred attorneys, with people that know how to create the best outcome for a first-time home buyer, right? And when you have that team, you're a lot better, right? You're a lot better off. When you make that commitment to one person, one group of people, you're going to see that your life becomes more simplified. Your life gets more simplified. The buying transaction is smoother. Everyone, you're kept up to date. Everyone knows what's going on, right?
Collaboration is really key.
Collaboration is huge, right? But even more so, first-time home buyer, right? Let's think about this. I'm a first-time home buyer. What are some of the things that we run into on a daily basis, right? Some of the things that I run into is down payment. Jeff, I only have this much money. Well, there are programs, right, Eddie? There are programs out there that we know about that can help you, right? Like Sonny Mae. What is Sonny Mae? Everybody's Sonny Mae. Sonny Mae. What is a Sonny Mae loan, Eddie?
Sonny Mae is a great program. We're here at Embrace. We're a Sonny Mae approved lender. There are a few banks on Long Island that are Sonny Mae approved. So we have kind of a niche there, because that allows us to offer that service, right? And Sonny Mae is essentially a conventional loan program. It lends under those guidelines, but the state of New York, that's what Sonny Mae is. The state of New York comes in and essentially gives a 3% grant. It offers various options as well. So the 3% grant is essentially free money, right? There's the only thing that free money.
Did I hear that right? Did you say free money?
Free money. I mean, not everything in this world is free, but it's free to a certain extent. So the only requirement that they need is they have their guidelines. They have income guidelines, they have purchase price limits, and they require you to be in the property a minimum of 10 years, right? And it's prorate. I mean, if you're under the assumption that you're buying your forever home, right? In most cases. So your only requirement for you to not have to pay back that money and not be free money is you move or refinance the house before that 10-year mark. Now, it's not so cut and dry because it's prorated. So if you refi in 5 years, if you refi in 8 years, it takes into consideration, so you don't have to pay back all that money.
So easy just to break down for our viewers. So if like you got $10,000 in free money from Sonny Mae, right? So if you got that 10 grand, okay, and you're in year, just for easy math, say you're in year 9, you're only going to owe back $1,000 if you sell it, right? Bingo. So there we go.
So,
right.
and it's a straightforward, and it's great because it's similar. It's to the conventional loan program, as you know, it's private mortgage insurance. So if you're in the case where you can't put the 20% down, it allows even for a minimum of 3% down on the loan amount, right? And once you're going the Sonny Mae route, as long as the credit is where it needs to be, obviously, with conventional loan programs, you want to be in that top tier of credit, because that with private mortgage insurance, it's really credit score and loan amount sensitive, right? So if those aren't right where they need to be, it's almost, there's no benefit to it. So we're obviously, for this sake, assuming that everybody's working in that range, but I think for me, it's one of those things where if you can take 3% of whatever, it's 3% of the purchase price or up to 15K max, right? So once you hit that 15K max, that's where it stops. Now, it could be applied to pretty much wash the down payment or help for the down payment, apply it to your closing costs. Or the big thing that I've done in the past that's a huge help is buying the mortgage insurance policy in whole. So if you're not putting 20% down, let's say you're putting 5 or 10% down, use that money to buy the whole mortgage insurance policy. That way, you've essentially gotten yourself to the point where you have no mortgage insurance on the loan without having to put 20% down.
Receiving thousands, right? Like, let's just real quick. Let's break out the handy dandy calculator real quick, right? So say I've seen the average usually on PMI, but somewhat like good situation, right? About $150 to $175 extra a month in your payment.
Correct.
Right? So if you think about it, it's $175, right? You're gonna pay that until you hit 22.5%, and it comes off, right? Sony May takes it off, right? We're lucky because even if you don't do it, that's the beautiful thing is that on Sony May it goes away, but on FHA it doesn't matter if you put 20% down, 30% down, 40% down. It's for the life of the loan, right? Cool. Big thing, right? So if we're at $175 a month, right? We times that by 12, that's $2,100 a year. So what do you think? How long does it take? I always say it takes about 10 to 12 years before you're at that 20%, 21.5% number, right? So even if we just hit it about 12 years, that's $25,200. Now, Eddie, tell me, that same scenario, estimates. We're not holding anybody to anything, right? What do you think the private mortgage insurance pay up front would be?
It depends. Like usually on an average loan amount, obviously what we're seeing like recently with this market, somewhere between 380 and 410 loan amount is the average that I'm kind of seeing right now with where these prices are going. Absolutely. You know, you're going to be, that policy is going to run you somewhere between $5,000 to $7,000.
Hold on.
That range.
So let's just say we'll go with 7,000 just to be on the hay side, because think about it. You're saving yourself $18,200.
Yeah, it's a huge number, and like I said, it's a grant from New York State, so you're essentially helping yourself out in terms of what you're bringing to the table, because now you're saving on your monthly payment because you don't have mortgage insurance, right? And you're fully investing all of your payment is going specifically principal and interest, property taxes, and homeowners, right? And the way I look at it too is, like, let's say that, like you said, that mortgage insurance policy being $175. Let's say you were fine with making that payment, still make it and apply it to your principal. That way you start knocking years off the loan automatically.
Take that 175, right? Times that by 12. I'm a big calculator guy, right? That's $2,100 a year, right? Most mortgage payments on that average price, if you're depending on what you're putting down, that's pretty close to a full principal payment, right? So if they're making that payment once a year, and Eddie's gonna be like, "Hey, Jeff, I don't like this way," but no, Eddie doesn't care, right? But
I don't mind
making that right principal. You're applying that $2,100 extra a year to your principal. You're gonna reduce the term of your loan significantly. That's huge. If you stay consistent with $2,100 payments a year to it, you're talking about knocking anywhere from 7 to 10 years off your loan.
Yeah, no, and it's great. I mean, it's a good, solid program, and I feel very lucky to be here at Embrace because like I said, not many banks offer it, and it's a huge benefit to buyers without question. You know, and it makes it easier because let's say we needed to come up a little bit with the difference. Now we have that difference because, hey, we're getting a 3% grant. Let's make a significant offer, or let's make it really, appealing to the seller, and boom, everybody wins in that scenario.
I love it because it's funny because it brings me back to the days because us, we're humble. We came from humble beginnings. Just like you, humble beginnings. We grew into success. We've been gay, but we've always been able to reach. Like Michelle and I are big on reaching down, helping other people achieve. That's part of the reason why we got involved in real estate, right? And we really primarily focused on first-time home buyers for a very, very long time. And I always looked for money for them in different things and different sources. I remember the struggle when it was her and I trying to buy our first house, right? Yeah. So I remember, I love it because, this is creative. I call this creative financing, right? It's finding ways to outshine the competition with your. When I say competition, I don't mean other real estate agents. I mean other buyers. I don't care about other real estate. I want to worry about other buyers. I want to know how I'm going to find you your house and then be able to get you that house in this market. It used to be great. We used to be able to go in and you could get a discount. Now we tell our buyers, how much over are you willing to go?
Correct. Yeah.
Right? it's a big difference in the market, right? And there's no end to this in sight. Everybody thinks there's going to be this big collapse. I don't see it, man. Interest rates are, yeah, they creeped up a little bit, but I mean, with that new stimulus surge, inflation will come up a little bit. Houses are going to still rise still a little bit. I still see 2021, 2022. My prediction, the Jimenez team prediction is we're going to see rise through 2022, maybe even to 2023 still, and then maybe some stabilization.
Yeah, no, for sure. And obviously everybody's heading into, or we've been into a lot of unknown situations, but hopefully with, the vaccine coming out and everybody kind of getting back to some sort of normalcy, we will see some stabilization everywhere. And, even with the rates creeping up a little bit, I mean, we priced something out today. Rates are still at 3%, 3.25%. I mean, who wouldn't want to take that?
I'm sorry. Anything under 5, in my opinion. Anything under 5 is going to be a seller's market. So you need to be a competitive buyer. Yeah. You need to make sure that your playbook is ready to go. You need that coach, right? You need the coaches, right? You need the senior. You just need coaches. You need somebody that knows this market, knows this game, has the team in place to be able to get you from just a regular buyer to a very, very well educated, knows the process, and has the right expectations set for this market. Now, Eddie, I got one more thing to ask you, right? Big thing. People always come to me, right? Big thing buyer, especially first-time home buyers. Jeff, what are my closing costs going to be? How come my closing costs are so much? Now, for me, when I'm out in the field and I'm working with a buyer and I'm trying to do rough estimates and I'm working, I always use the multiples of 6, right? I use 6%. Right, depending on taxes, right? Because we got to worry about taxes. We're going to go over that too, because taxes play a huge role in what you qualify for and monthly payment. But, right, closing costs. Oh my God, 6%, Jeff. Well, 6% of 400,000 is, sorry, I'm bad at math. Don't mind me. It's 24 grand. I need 24,000 plus I need another 12, right? Another 12 on top of that, Jeff. I don't have $36,000 to buy a house, right? That's what I'll get told, right? Now, we already went over how we can help you with that, right? We got the 3% to bring in, boom, brings it down almost 12 grand, right? Pops you down, brings you down to about 12,000. Now you only need that 24. So we're in a balanced state. But everybody's at this consumption. The bank is charging some of these fees. Realistically, the bank fees, the loan origination fee is realistically always under, to me, it's always under like 4 grand, 5 grand. It's never over that. It's really cheap. Where people don't have, and I see it, is, Eddie, what are the other things that people are thinking are actually closing costs? And they are considered closing costs, but they're really called prepaids, right? That's the term we use?
Correct. And the best way I can explain it is third-party charges, right? So here at Embrace, we charge a $11.95 origination fee, and that covers everything. That covers your processing, the rate that we give out, are no junk fees, no extra points for the rate we give. We're very competitive in that regards in terms of closing costs, because we have seen other lenders where it varies a lot, and I'm lucky enough where I don't have to do anything. I just have to charge my origination fee, and that's it. And not to kind of wave a little bit, but our bank with Embrace came out with the affordable FHA program, where we've essentially first-time home buyers waive that origination fee. So you're essentially and it's an FHA loan program, 3.5% down. It's the same kind of program. The only difference is through here at Embrace, we've waived that origination fee. So basically the only thing in that scenario that you're getting cost and you're getting charged in closing costs are third-party charges. So the big thing, I go down the line, I'm a broken record and I know it. So this is how I go.
Do it.
Your title report, right? So the attorneys hire a title company to order a title on the property that you're going to buy. It's essentially to assure you that the house is free of any liens against yourself coming in, and with the seller making sure that there's nothing against the house where in 4 or 5 years you're having a barbecue in your backyard, or mail comes or someone knocks on the door and says, hey, the owner of this house owed $5 grand, you're the owner, pay up. No. So the bank has to ensure that that will never happen. The title company issues a title policy ensuring that if that does happen, you take out that paperwork that they give you at closing and say, no, I was assured that, right? And you don't have anything to worry about. They run.
All these guys. Thank you. Have a nice day. Right?
Yeah. and they run searches against, and they won't let you close until you have a clear policy on both sides. So you may be ready to go, and I've unfortunately had it recently with a buyer who was ready to go, approved, got them. We were ready to, clear to close. The seller had $1 million lien with the state of New York, and
Dead deal.
Dead deal. Obviously, not going to pay.
The house wasn't worth $1 million.
No way. So, the bank will not let you close until everything is clear and out of the woods in that regard. And they run everything. I always say this, even if you skipped out on a red light ticket in 2012, that will show up on the title search.
Eddie, I had somebody with $7,000 in red light tickets.
I believe it.
I called the client up and I said, title case driver. I said, do you not stop for red lights?
Yeah, I mean, this
is what they said to me. They said, I hate those stupid things. I'm never going to pay them. I said, well, guess what? If you don't pay them, you're going to lose payment. You're going to lose this. I said, I hope you got $7,000 because we cannot close until you clear these violations. And he was like, are you serious? I was like, yeah. And it was actually a big thing. But luckily enough, they made it work. But it was it was like, I was shocked. Think about it. They take like he told me later on, he was like, we closed. He said later on, he says, Jeff, you know what it is? He goes, when I leave my house, I make a right on red and there's a red light camera right there. And I just run the red light.
Well, I'm guilty of those too. I've gotten dinged with a bunch of those, but me being in the business, I pay right away because now I know that in the future, when it's my turn to go, on the chopping block, so to speak, with that's not coming back to haunt me. So,
it's in the closet, right?
Absolutely. So it assures us that you're coming into taking in this property free and clear, right? So and then, like I said, they run bankrupt searches.
Other stuff too.
So they run basically any bankruptcies. If you've been on title on any other, my first question always is, have you ever co-signed? Have you ever been on title? Have you been given a property, even if it's a log cabin upstate? Doesn't matter. Have you ever been on anything? Because it will come up, and then that could impact you because even if there's no mortgage on the property, we got to hit you for the taxes and the insurance of that property. So it's very important that buyers are very upfront with us. Listen, we're not the IRS, so it doesn't, for us, we just want to make sure that it comes and we're taking everything into consideration. That way we can properly tell everybody in the team, hey, we're good to go. Let's go forward. So,
all right, so we got title fees. What else we got?
So the big thing always, we'll get the last one with the prepays, but you'll have recording fees and state taxes for the state of New York. The state of New York will never have its pockets empty when you're trying to buy a house. So they're going to come and tax you for the transaction itself based off the purchase price. And basically, that's just the state saying, hey, you're buying a house, give us our cut. So recording fees also, that you becoming an owner, when whatever town that you're going to buy your house, the attorneys are going to record the deed and the mortgage to that town. So the town has their fees that gets included when we disclose our loan to the buyers. The prepaids, and you touched on it. It's the biggest thing because I always disclose my loan, and this is how I do it. I always want to be a little on the higher side with disclosing my property taxes because I never want to be in a situation where we get to the finish line and we're short, $1,000, $3,000 because I wanted to show the cheapest closing costs and only disclose 5 months of property taxes instead of disclosing. I always disclose 8 months because that protects me from anything.
I always say, I'm going to scare the heck out of you.
Yes.
Right. I'm going to scare you. But I'm almost positive that it's going to be less than what I'm going to tell you. Right. But I need to tell you the higher amount. So in your mind, you're there instead of lower, right? So we're not going to talk about lower, but this is where you need to aim to be. And you know what's best about that is 9 times out of 10, it's great. We look like superheroes, don't we?
Yeah, oh yeah, absolutely. And that's why that's why I always laugh when say, "Oh, your closing costs are too high." Well, compare me to someone. Let's break it down because, like you said, it's not necessarily the cost of doing the loan, but there's other factors that have nothing to do with you taking out a mortgage that come into play. And that's why it takes, that's why you see these high numbers with these, closing costs, is because, if you're in an area where they're $13,000 a year or $15,000 a year, that's a big chunk of your closing costs is going
right there. It's $12,000 in taxes. Think about it. It's $8,000 of your closing costs is 8 months of your taxes.
Right.
That's the huge, to me, closing costs is always, and I always look at the closing statements and I always look and I go, man, but it really comes down to the taxes are always the biggest part of the closing costs. It's the biggest chunk. And then title bills and title fees, that's a big part too. And then but you're paying for services, you're paying for insurance policy, right? And then you got a couple of minor other things, right? There's a couple little other things, nuisance fees, right? Nuisance things that come in, right? What are those, Ed?
Well, so the prepaids as well that you're going to have are going to be your homeowner's policy. Now, the bank requires you to pay whatever homeowner's insurance policy that you get up front, or whatever you choose. Because when I give out my monthly kind of payments on certain examples, when we first pre-approve our clients, I always put a standard policy. Now, most policies, if you're in a single family residence, are going to run somewhere between $1,200 and $1,500. Now, it varies in the value that you're covering against. It varies against the square footage, or anything extra that you might want to put onto the loan itself. So you are ultimately at the end are going to pick that policy, and whatever that amount is, it gets paid up front, and then you're still paying for it monthly on a month-to-month basis going forward. That essentially, and that money, I always say, because it's like, where's all that money going to? It's not going to the bank. It gets set up in an escrow account where that is where the bank is going to, it works as it's kind of two-sided in terms of what it works for. So that's how the bank is going to pay its property taxes when they're due. Now, your taxes aren't due on a month-to-month basis. They're either due every 4 months, every 6 months, depending on Nassau, Suffolk, even out east, they vary, right? So it's not like the bank is going to make you pay these, every 4 months. So every time that they're due, they got a big chunk there already paid from your closing costs that it gets satisfied. That way, you don't ever have to call the town and make a payment. The bank is going to take care of that. And that's why you pay so high up front. So it assures you, it gives you peace of mind. All you have to do is make your monthly payment, and then every time you make your monthly payment, that escrow account gets replenished, right? If there's an overage, you get a check back, you get a little thank you, and they'll give you a little bit of money back, if there's an over.
Analysis, right? Michelle always does this. I don't get involved in it, but Michelle always will sit there and she'll call up the bank and she'll request an escrow analysis. Something you do once a year. And what they'll do is they'll go through your escrow and they'll see and they'll make sure if there's any overages, you have a choice. Either you can take that back, you can apply it to the principal, or you can leave it there. But although the bank really doesn't like you to leave a lot in there because they have to pay you interest on it, right? So at the same time, I always notice that every year certain things go up. Your taxes go up a little bit. Your home insurance goes a little bit. So it's very rare that we ever take any back. A lot of times we'll have a shortage.
Yeah,
and they'll adjust your payment. And I'm like, no. You don't have to adjust my payment. I'll send you the extra $200 just so that we keep it even keel. Let's adjust, and I'll pay, and we'll put a little bit more into the escrow for that, right? So we'll just put a big lump sum into that escrow to cover the difference, right? Not huge, but like a couple $100 just to cover that difference, because it's never a lot. It's always like a couple like 200, 250.
Whatever it raised.
Whatever it raised over the course of the year, right? Yeah. But I mean, that's huge. So let's see. We got title, right? We got taxes. We got recording fees. We got prepaids, right? Which is homeowners, your property tax, not your state tax, but your property tax. And then you got some title fees. We already went over that.
Is that all of them?
I think that's
one last thing that you're gonna miss too, that we're leaving out, is gonna be your interest, right? So depending on when you close, your closing costs essentially cover your first monthly, first payment of the loan. You get a grace period of 45 days from the day you close to the next time that you have to pay your mortgage. So in your closing costs, you're going to accrue daily interest from the day that you close, and then covering that first month that that you need to pay. So obviously, it's an amount that you'll see depending on whatever the rate is. But, after that, because everything else is going to be paid. You've already prepaid your taxes. You don't have to do that. You've already done your homeowner's insurance. It's really the interest that you have to prepay a certain amount to cover that first month that allows you for that grace period. Because the way we see it, and every lender is like this, the way they see it, you've already paid so much in closing costs. We're not going to make you pay. Like you move in, middle of, let's say, April.
Yeah.
In May, all of a sudden the first payment's due. Like, no.
Yeah, but, they give you
They're like, let's cut you a break. You've paid enough. That daily interest is already covered in your closing costs. And it gives you a little bit time to reset, put everything, in regards to making that first payment, in line and ready to go from there. And you're pretty much it.
One more thing that I think we left out about taxes, right? Because there is one more thing about tax that comes up, and it's a shocker to some people, right? So if I'm the homeowner and I paid my taxes, right, where I live, taxes are due twice a year. They're due in June and in January, right?
I think actually like March and May. I don't know.
Well, it's somewhere around every 6 months, right? It's like January and June, right? Pretty much right around there, right? So if I close my house, it's like, so the bank is going to take mine like on that in January, they're going to pay through to June. But if I sell in April, I've already paid. I need my money back, right?
Right.
So what's going to end up happening is you're going to, as the buyer, you're going to have to reimburse the seller for whatever amount they have paid already for those taxes, and then you're going to also have to pay your 6 months of escrow. So there's a little bit of fees that come from there. So there's. Right. Look, at the end of the day, that's why I love the multiple of 6 for closing costs, because right. you can almost, unless the tax is like $20,000, then it doesn't work, right? But for almost every normal first-time home buyer, single-family residence, on Long Island, majority of the time, it's 6% will give you a really good analysis of your closing costs. Like, it's going to give you a really good snapshot. So if you're out looking, you're like, man, how much money am I going to need? Really simple. If you're approved for FHA, or it's 3.5%. For down payment, it's 6% for your closing costs. That's a rough estimate. It's very rough. As you get closer to shopping with us, a lot of times on Saturday or Sunday, Monday, Friday, 7, 8, 9, 10 o'clock at night, I'll be calling Eddie. Eddie, can you do a CD for me? Can you give me an estimate on closing costs? And then Eddie will be able to estimate a much narrower gap and kind of close that bridge and give you a more property. For that particular property that in which you're looking at buying.
That
right?
price and those taxes.
Exactly. So
yeah, and that comes into play what you said before about how much taxes they're going to have to prepay, because we don't know exactly when you're going to close. Listen, I've been with a buyer where it took us 1.5 years to close. So it's like, yeah, I might have told you closing costs for this number, but if we're closing in the later half of the year or the next property years, you don't know what the seller's situation is going to be like, and where. Like you said, you guys are gonna have to pay because it's essentially, I always say, it's like he's already paid for months. He won't be living in that property. So that's on you to give him back at your closing costs. But our attorneys, the title company, the closers do a great job of making sure that everything is taken care of. So you have peace of mind when you take ownership of the property that everything is up to date, because there is a very, the
day you get the keys, it's your house.
Correct. And you want to, and listen, it's a very stressful property. That's why the process, that's why it's a very important thing, like you touched on before, is that team aspect, because, while we don't all work for the same company, we're part of the same team, and it's one of those things where if I'm referring an attorney, if I'm referring agents, I want to have, and Jeff, it's a great thing we connected, because I believe me and you and your team have the same kind of mentality when it comes to how we approach this business. It's honesty and straightforwardness, because it sounds very cheesy, but in the long run, that's what wins out, and that's what gives you that reputation. And
I would say I'm not a real estate agent, right? The R in real estate stands for relationship, right? I build relationships, right? And at the end of the time of our relationship, a lot of time you end up buying a house or selling a house. But at the end of the day, to be honest with you, I love what I do. Don't get me wrong. I love going and seeing a house. I love listing houses. It's my favorite thing. But at the end of the day, what I really love is the engagement with people, the ability to teach, the ability to share my experience, to guide and help them to home ownership or whatever it is, whatever you're looking to do in real estate. That's what my passion is. Look,
helping you.
We have a saying right in this house that we like to make a mess and then we'll clean it up, right?
Yeah.
Figure it out, right? We figure things out as we go, right? Which is good because we're always learning, right? So just like we're always losing, we always want our clients to always learn, right?
Yes.
We don't want to just be like, oh, this is the house. We have clients sometimes that come to us and they've been with other real estate agents, right?
Yeah. No, and yeah, it's very the education part, and you know, I've considered an honor, you know, being in that world of the Spanish speaking clients, right? I'm Colombian. I'm very proud of my heritage, and for me it's a sense of pride because more than anything, you know, the education process in that community is very important. There's a lot of obviously distrust. You know, there's a lot of unknowns that people make. They're very nervous when it comes to this type of process. So, you know, I have a thing. Yeah.
My last name's Jimenez, right? Everybody thinks Jeff speaks Spanish. Right?
No, but listen,
Jeff doesn't speak too much Spanish. I understand a lot, right? People will talk, and it was funny because I was just with somebody who's helping out on a listing of ours, and he was doing some trim work, and he started talking to me in Spanish, and I understood him, and I answered him in English, and he goes, "Wait a second, you don't speak, you understand it?" I said, "Look, I don't understand everything. I got about 7 of the words, but I could piece it to get to what you were saying." He goes, "But if you can understand it, you should be able to speak it." I said, "Look," I said, "I wasn't brought up. You know, my mom was Irish. She didn't speak Spanish or French. You know, like my father was at work all the time. He didn't come home and talk to us in Spanish. You know, but it's really cool to be able to still have that conversation and align myself with people that do speak Spanish. Like Ed, one of our agents, Janelli Santiago, he's fluent in Spanish. Yeah. You know, so we're diversified so that we can have that, right? But what's beautiful is I love watching that happen. And right, there's a lot of times where we run into that issue where, you know, they don't want to have that communication. But then after I'm saying, look, I'm going to connect you with Edward Rojas. He's going to go over everything. He's going to explain it all to you. I give them to you. They come back to me. They're like, Jeff, thank you so much. No one's taken the time, right? No one's taken the time, because what I found nowadays is, and it's sad, is most people are just like, let's go. Are you pre-approved? No. All right, next. No. Yeah. Me, I'm like, no, look, slow down, right? Because like I said, I get buyers that come from other realtors all the time, and they'll say, Jeff, I'm pre-approved. I'm ready to go, blah, blah, blah. And I'm like, all right, well, what's your, what are you comfortable with? What's your monthly payment? What are you comfortable with? And they're like, what do you mean? And I'm like, how much taxes did they use to qualify you for that amount? I have no idea. Yeah. I'm like, wait a second. Who did you, and I got to go through it. I'm like, look, do you mind? And I'll ask them, do you mind if we break, we're going to spend like 30 minutes on the phone. We're going to go through some things. I'm going to rattle. I'm just going to talk. And then if you have any questions, we'll go over it at the end. And let me know if I can be someone that can help you, right? At the end of our conversation, I'm just going to ask you. If you say, Jeff, no, best of luck to you. I can tell you that at the end of those conversations, I have very rarely ever ran into situations where people aren't like, Jeff, can you please get me in touch with these people? I need to know more, because nobody teaches you this, right? Yeah. Most people are just so go, especially us New Yorkers, right? We're like,
we need it. Yeah, we need it right away. We need it quick. Yeah.
Now I want to buy it today. I want to get my keys today. I want to move in today. Yeah. Like, whoa.
Another from Rocket Mortgage.
Dude, you gotta be real, right? You gotta take a deep breath. We gotta make sure you're on track to where you gotta go. And once you're on track to where you gotta go, we can get you in that house, right?
Absolutely.
I go in and I put an offer on that house, and you got that pre-qual, right? That pre-qual that you just told everybody your numbers, and then we go to contract. You put your money down, and guess what? 45 days later, that sometimes I've had it happen. I've seen it happen. 45 days later, that we get that phone call. They don't qualify for this house.
Yeah. No, it's very, very important that you get your financing in time. And for me, when I'm going up against, like you mentioned, the Rocket Mortgage type, where it's like quick, it's very easy for me to say, listen, this isn't, something as a 1, 2, 3 process. You want to be and whether it's Spanish speaking clients, English speaking, it doesn't matter. There's a sense of education to this where it's very important, where it's very hard to just say, look at a computer, run your numbers and say, all right, I'm ready to go. And for me, and mentioning, the time in taking these phone calls, I have this thing where I say to everybody, you know, I say no more than yes, you know, because sometimes people aren't in a situation where they're ready in that moment. So for me, you know, because a lot of what we do is referral based, you know, Embrace doesn't provide us with, you know, with clients, or we have a window, you know, on Main Street where you could just walk in and apply for something. You know, we have to go out there and generate our business with agents, with attorneys, with, you know, with accountants, with everybody to try to get a foothold into these potential buyers to come in our way, right? So, you know, for me, it's very important taking that time out to, even if I always say, even if I can't do anything for you, I'm going to establish a plan for you where you might be ready 6 months down the road. And I can't tell you how many times that's worked, time and time and time again. And look, what does it take? A 30-minute phone call? I'm on the phone 24/7. You know, what's another 30 minutes going to happen?
Because Michelle will be like, we'll be ready to go out, and the phone will ring, and she'll look at me like, I get the look, right? I get the style of like, are you really going to answer this phone?
Yeah. Oh yeah. No, my girlfriend does the same thing too.
Like,
because
yeah,
it's like,
nobody needs me. I need
absolutely.
And I get on the
Absolutely.
phone, think about it. I'll be driving, talking, have no problem. And then it's funny because I always hang up the phone. And Michelle, what do you always say to me after we hang up the phone?
Oh, you really helped them. Help. I mean, we really believe here, especially with the Jimenez team and building our team, like everyone's life situation matters and everyone is different. Everyone's at a different stage. There's so much that goes on in people's lives. So if we can make it a little bit easier and help them and guide them, that's really what it's all about.
And it's partners like you, like Embrace, that make this all possible, right? So to wrap this all up, right? We went over quite a bit today.
Yeah,
there's a ton, right? Eddie, how do people get in touch with you?
Well, you know, my information here is at the bottom. You know, you can look me up on Facebook, Edward Rojas. My homepage is there. You know, my cell phone at the bottom. That's the best place to reach me. I have a homepage there, a landing page that has our application. You want to get priced out. You know, everything consultation, like you said before, it's a free service to everybody. You know, and it doesn't hurt to at least know exactly where you stand, because that's, especially in this market, you want to be ready to go and have all your ducks in a row, because if not, you don't want surprises at the end. You don't want your hopes to get up and then all of a sudden it comes down the line. You know, if you're a business owner, you know, I always advise business owners where they're very busy people. I get that. But if you want to buy a house, you want to make sure, because your income as a business owner can vary. You know, if you're a person who receives bonuses or commissions like myself, where it's not always guaranteed the same amount every month, it varies. You know, so you want to make sure exactly where you stand. And you know, for me, it's very important to get that information out to people. So you know, feel free to reach me out at any time. And Jeff can attest to this. I'll be on it. You know, even if I'm at Little League practice, he's heard the things before. Answer the phone, you know, because I'm just standing there waiting, you know. And for me, it's very important to get I've been very lucky to come here and Embrace, you know, a couple of years ago. And then for me, it's been the best decision of my life, because it's put me in a situation where I'm lucky enough where the other loan officers have established a big foothold in this area when it comes to lending. I've gotten, you know, deals accepted because they've worked with our bank before. They know our processing. They know everything that Embrace is about, and it's very easy to step by it and just keep that tradition going. So, you know,
you're right now, it's driving you crazy to hit that button, isn't it?
Yes.
I'm looking at my phone. I got about 12 now that I gotta call back, right? But so that's, geez, I'm like, I don't know, 12 hours worth of work ahead of me, right?
Well, thank you.
But Eddie, thank you so much for coming on. We went over a bunch of stuff. We went over some wonderful information for you first-time home buyers. If you want to reach out, you want an in-depth one-on-one conversation, Eddie and myself will be more than happy to jump on a Zoom with you, go through it. So this way we have that person-to-person view in this new world we live in. And then we can really dive into your situation, your family's wants, your family's needs, your family's desires. We can try to make your dreams of real estate ownership come true, and we'll do our best to advocate for you. So I can't say thank you enough to Eddie. Again, he's known as the get up and go loan officer. He gets it done every time. And he's not afraid to tell you, guess what? We need to stop, we need to work, and we need to make this work. And then you'll be ready to get up and go. So thank you so much for coming on the Jeff and Michelle show. It's been awesome. I can't wait to do more of these with you. Thank you.
Thank you.
Yeah.